Samir Arora joins us. Let's talk markets. Let's talk about, in general, his view about what is happening to the macros also, and where is he currently investing in this kind of a volatile market. Samir, good to have you back. Thank you for joining us. I can see the bulls and the bears behind you. Clearly, you've started going back to office.
For a few days. So now in Singapore, 75% employees can go to office. Previously, it was 50%, but even now we go like 2-3 days a week rather than every day.
Touch wood. Good to hear that. Samir, the narrative for India, let's say in the month of Feb, why Feb, even first week of March, was that world is still struggling with Corona and India has managed to find its way out and vaccines are getting rolled out. Now the India narrative has changed completely. It's the reverse of what is happening to West versus India.
I think it's a shame. And actually, we have been fooled twice. I used to say on these interviews that, last time we were fooled into believing that because we have haldi and we have all these food items, that's why we are not getting it for the first 15-20 days in March last year. And this time we got fooled that it is because, we already have so many other flus and so many other, because of bad hygiene or whatever, or bad environment, that we can handle it. I think this one is more depressing, and I don't want to be in that camp. Of course, as a fund manager, we'll be buying stocks or selling stocks, but I also hate the idea of our industry. And I've slowly started hating it, that 1 year later somebody will say, when people were dying and when people did not have vaccine, I bought some 3 stocks and made 20% extra return. I don't want to be like that kind of a fund manager. I think we need to first worry about the fact that we have really blown it this time as a country.
Unfortunate, Samir. It's unfortunate. It's a crisis. We are trying to struggle, and fingers crossed that we come on the right side of it. I'm optimistic like you. So what's happening on ground certainly is not nice. But I guess the world has seen a lot of crises, and for a financial investor, I'm purely talking about investing, the crisis sometimes give you an opportunity to really invest. Samir, so what is next now? Given that the assumption was that earnings will only go higher, demand will remain strong, and capex will start. Do you think the big picture, which in a sense was the comforting big picture for us a couple of weeks ago, that gets challenged?
Well, it gets delayed for sure, and that may be worth 5-7%, which in a big picture sense, as fund managers, we will ignore, because we will believe, not just say, but believe that we know the end game. The end game is that whether it's 3 months here or there, which will be mostly there the way we are doing it, that there'll be vaccinations. And because we can see it in other markets, that other countries, that where vaccination is happening, at least the vaccinated people are not really having very big problems, either in percentage or extreme cases of going to a hospital and all. So for us, of course, we every day get new stories of how in September suddenly we'll have these 5 vaccines when we could have easily ordered them, or paid Serum Institute and not let him buy Magma or something, or given him a higher margin so that they could have produced more. For some reason, we believe that we have only 15-20 million people who need to be vaccinated. But one way or the other, from a stock market point of view and a cold mathematics and arithmetic and numbers point of view, if it gets delayed 3-4 months, it is worth 3-4%, because you are supposed to make 15-20% a year. And if you delay something by 3-4 months, 5 months, you lose 4-5%.
Samir, the big difference between last time and this time is that telecom is not outperforming. Reliance got into this fundraising spree and Bharti got re-rated. So clearly, markets are approaching this crisis slightly differently. Even though it's a second wave, the market reaction is very different.
Well, no, not really, in the sense that Reliance was not really called a telecom play at that time. It was called a financing play and becoming a global tech company, which since then we haven't seen much, in terms of output or visible things on the ground. So, but if you look at it like that, okay, you can say it's a big change, but beyond that, one stock doing well or not is not the real difference. The difference will be that this time, in that sense, people will not panic as much as far as the stock market is concerned, because they will so recently have seen the playbook of what happened last time, and that there's liquidity, and that Also, we will vicariously celebrate that some other country has got properly vaccinated and see how they are doing okay, and therefore plus minus X number of months we'll also get there. But the problem is along the way we would have wasted and basically lost so many lives for no reason, for less reason.
Okay. Samir, what are you making of what's happening on the global front? Because we were closely tracking that initially to see the kind of impact it may have on sentiment, fund flows. Things seem to have calmed down given the kind of commentary that's coming in there, from the Fed chair on inflation, the yield curve flattening somewhat, or at least pausing for now, or cooling off a touch. Are you reassured that at least in the interim is not going to be an issue with regards to flows into India? It's more going to be whether or not we actually manage to control the vaccination drive? I
think right now, of course, the global issue would be more of a positive for us than our local issue of having lockdown. And also there, I always feel that even if the US markets fall, then the rest of the markets may outperform, but they will fall mostly. And there, this issue was there that Biden wants to increase corporate taxes, but then he said recently that he's willing to negotiate on all these things in return for the package being whatever, $2.odd trillion, maybe, they'll bargain on those things. So if that issue is also taken off the table, or the tax hike becomes less, then there is no direct first level impact on the market and on corporate. There might be indirect impact of inflation or something going too high, too low. But at least this tax, which is the most visible and direct thing, would be less crucial in that sense. In India, the thing is that we celebrate every day that steel prices are going up and other prices are going up, but it is being paid by the same crowd or the same corporate sector and the same not the same company, but in this same country, in the sense that the people who are paying these high commodity prices are also Indian companies. And you can't expect that, we'll pass on everything, whether it's auto industry, consumer durable, construction industry. But right now we seemed to be doing that over the last few months, that we are celebrating the hike in steel prices, and we are also celebrating the fact that auto and commodities auto and consumer durables and paint companies and everybody else will also enjoy it. So all those also will have to choose one day which way it's going. Because all prices are going up. It's not just commodity prices. It is shipping prices. It is, DRAM prices. It is everything. Everything is going up in that sense. And that also has an impact on the corporate sector and earnings and everything.
Talking about earnings, Samir, how much are you really reading into this quarter's numbers? Is that really going to be an indication of what's to come? It seems to be a little off the mark there in that sense, given what's currently going on.
Well, mostly if we say, which we are, that we are long-term investors, unless some result is really bad, we're not going to change. Let us say ICICI Bank or HDFC Bank or some IT company, instead of growing 18%, says I'm growing 16%. They will give some story and we'll believe it because we believe in the company and we believe in the fact that they are still better than everything else in India, say, for example. So beyond a point, I personally don't look at earnings unless those earnings are a shocker, or on the other side, some great thing has happened, and most of the time those two things don't happen. So I, at least day to day, don't look at stock earnings. I don't even know which day these earnings will come, but when they come, we look at it and our analysts do it. But beyond a point, I don't care for each at a time, that whether it's X% or 1% less or more doesn't bother me.
By the way, we're getting from bad to worse. We're 367 points lower now for the Nifty futures, so the crack has only deepened further. 2.5% lower, and there are only 6 F&O names which are standing to the green. Lalpat Lab, Infosys, Pfizer is less than 1% up. There's Coforge marginally hanging in the green, and there's Cipla, which is up about almost 0.5% or so. Besides that, it's all a deep sea of red, and Cadilla to some degree is largely flattish. DLF cracks 8.5%, BOB cracks 8.5% on the futures, that is. RBL Bank futures down 8.5%, IndusInd Bank down 8%, and BHEL as well, along with LT Finance, they're all lower by in excess of 8% as we speak right now. Samir, it's getting from bad to worse. You think another niggling worry and factor is also the currency, the fact that we are now at weakened levels and we're at an 8-month low, and a sharp slide, especially since the policy announcement on April 7th. Do you think that also could be worrisome for the market sentiment?
So, till today, or before today, I was happy that this rupee depreciation happened in a month in which the market was otherwise up some 3-odd%. So all we got in the end was some 0.5% up down in the market. Today, maybe we can little bit be sanguine about the fact that it's already depreciated to 2.5%, so that it may not start from today. Otherwise, you see, the whole thing is how these things happen, and even if the same things happen in a month, but if all those things happen in a day, or if something was to happen in a quarter, but it all happens in a week, it depresses people more and it makes you stand out more. So let's hope that today and tomorrow, whatever, it doesn't have a separate currency impact, because whatever happened last week on currency, if it was to happen, for example, today, with the end result being the same, and today the market in dollar terms being down 6% because it's 3.5% in rupees and 2.5% in dollars, would be a different number than having the same 2.5% rupee fall last week and the market falling this week. And it is for this reason I always talk about, for example, because I think of these things only as a fund manager, that if you have, which I say for Warren Buffett and some others like that if he had first 3 or 4 5-year periods or 1-year period where he had very good returns and then he has had very bad returns, if the mix only had been different, that's the end of his story. There would have been no Warren Buffett. If all that had happened was that the last 10 years that he's had would have been the first 10 years, and then he would have had the good years, the time taken to recover from that would have been much longer, and the whole thing would have been gone. So it's the same thing. I'm hoping that the currency, having already depreciated by some 2.5% last week, makes it might still depreciate today, but less likely that there's a new round starting from today, because it's just been quite a significant one. And at the end of the day, the fact that RBI has 580 billion, and last week they should not have defended it because the rupee was reacting to their own policy. So there's no point in coming up day one on a policy which is aimed, in a sense, or not aimed, but it is clear that one of the effects of that will be a depreciation of the currency. But when it falls today and tomorrow, then RBI, what is the point of telling the world that we have 580 billion if you're not going to use it on some of these days?
By the way, it's only getting worse out there. 3% lower, 450 points gone for the Nifty alone. There is not one sector which is in the green. In fact, Infosys as well has given up most of its early, opening gains. Lalpath Labs is the only stock which is actually comfortably in the green right now. Only these two names in the entire F&O universe of 159 names, 157 all bleeding as we speak right now. Real estate taking a sharp nod, banks, automobiles, chemicals, financials, media, metals, oil and gas, and power, they're all extremely hard hit right now. Samir, we've fallen, almost 1,000 points on the index alone from the top. Where is it that you were tempted to profit take right now and, try and protect your position here? What would you sell?
Well, we, talking about the offshore fund, are a long short fund. So we always have, right now we are maybe 30-40% short and maybe 110% long. So we are always short something, and mostly our shorts are more high beta. So on bad days, they fall more. Today, of course, everything might be falling, but in general, that is the thing. But we never take drastic positions because we otherwise broadly believe in the backdrop. We believe obviously in the Indian market. We believe in equity markets per se, and then we believe that we have chosen stocks which are better than that market, or on the other side, worse than the market. So we might move the net around 5%, 7% here or there sometimes just with an index, sometimes with Bank Nifty, but 90% of the time with individual stocks. We don't take aggressive positions, but you see, only thing that I learned after it is that I don't want to be a hero. I don't want to say that I have never, like people became in some sense saying, oh, in March of last year when I didn't even know what happens, I saw that in 100 years ago in the Spanish flu that had lasted 1 year without knowing anything about the Spanish flu one day before this broke out today. I don't do like that. I stay within my limit and I go up and down 5, 7, 10% on the net exposure, because otherwise I strongly believe that equity markets have an ability to rebound. And in this case, it's not that negative from a pure financial point of view. It is negative because it is unnecessary pain to people. But from a stock market point of view, I strongly believe that because the playbook is there, because the end game, which is people getting vaccinated, and the vaccination is per se is working today, I believe it, unless something goes wrong after that in the world. But so many people have been vaccinated and nobody has reported that the people who are fully vaccinated are having extreme cases or such scary numbers that also is in doubt. Therefore, it's a matter of 3-4 months. Now, the 3-4 months might be very painful for people, for businesses and all, but the stock market, you know how it is. Even though I consider it not very long-term discounting, which people believe, but it can discount 6 months without a sweat in a few days.
So let's assume that markets are discounting the news on the second wave of coronavirus. The sector which has been the maximum casualty is the banking sector. Today the bank nifty is down 5%. The bank nifty has gone back to the pre-budget levels if I look at the data financials. Now if we are bullish on India, if we think the economy is going to bounce back, financial is always the first port of call. So do you think financial stocks are giving a great entry point for a medium-term investor?
Private sector financials are giving, and state-owned guys have not shown that they are really divesting anything. We don't know, even today BPCL is falling when in this quarter, like already the quarter has started, it is supposed to have been divested off and sold at a premium. So in the private sector financials were strong, yes. I think why the banks might be falling more today is that people are confused and investors are confused, and I'm also confused that suddenly what will the courts come in and say? Will they again say that give these guys more time and basically try to protect the people from God knows who, because there is nobody trying to be unfair to them, but it's the court's intervention and other things. Otherwise this thing, some banks will benefit, some will be hurt, and some will survive with dignity. But if you suddenly impose rules that now you can't charge interest on interest again, suppose the same thing happens again. Then again, there will be more pain for the sector. But otherwise, we have always believed that the 2-3 good private sector banks, and maybe 4, and even the State Bank of India will always be good relative to everything else that we have in India in this sector. And also broadly, this sector is better than most of the other sectors. Yes.
Two things happening for IT. One, the demand has come back because world wants accelerated digitization or digital adoption. That explains why the top line growth has been strong for IT. But on the other hand, IT companies are also adopting practices of work from home. They're giving a lot of cash back. Buyback was announced by Infosys over the weekend. So where is IT headed?
IT is our big holding. I mean, we will have maybe 25% in IT. I think the index may have 14 or 15. So IT is big because IT is also a vicarious way of playing the US tech, which we can only see from a distance. See, there's a big difference because people say that now India will also have these IT companies listed here, and therefore these will be very hot companies. Please note that the Indian companies will be going public after they have already grown for a number of years. So today, to compare an Indian internet company with what happened in the US for the last 20 years is because that US company got listed 20 years ago. So Amazon got listed in the 90s and Google got listed in 2000, whatever, 7, 8 or whatever. So our Indian companies in the IT, not IT, in the tech sector have grown while being private to such numbers that if you look at India's market cap and market cap of big Indian companies, then mostly these guys are going public after having basically extracted all the value, or not all maybe, but a large part of the value while being private. So they will not be as great performers in the public market as the US companies have been in its public market because of having listed early, which is what India used to have in the past, where the companies would list early and therefore the public market investors would get a lot of returns from it. Now these companies are coming at such high numbers relative to India's market cap and market cap of other companies that they are not going to even do a great job. They might be okay performers when they do list.
When I historically know you, you can always look at 2-3 years out and pick long-term trends. You know, when you bought into Pantaloon or HDFC Bank, is there anything in the IPO market which looks expensive today, but 3 year out, 5 year out, that is the growth business?
No, there were many businesses, but in these companies, some of these companies are trying to extract too much value. So, for example, today you might think that Zomato kind of business will be very good. But when we'll see then when they are listing that what has happened to the stock prices of Deliveroo and of the other guys and Meituan and all these guys, and see how India fits. Because the thing is, there is a different angle also. The market cap of a company in India versus the market cap of a company in US, the difference is more or less understood, because there's not one but hundreds of companies which are comparable, which are otherwise, because of the size of the Indian market and all that. So you can't come disproportionate to that and make money. That is my thumb rule. There's a certain rule for even MNCs to the Indian subsidiary, how much, unless that subsidiary in India has become very big for whatever reason, there's a thumb rule for even that, which you can put down 50 companies and see what the market cap of Nestle is to Nestle India, Colgate is to Colgate India, Lever is to Lever India. And sometimes they'll be higher than the normal because of, the other competitors having not come into India. For example, Levers might be high because it's been here for 100 years, but P&G is not here and stuff like that. But in most of the other cases, the boundaries are clear. And if it fits within the boundary, you should buy it. Otherwise, let it be.
Samir, we always ask you your views on how to get rich. Look forward to those nuggets, of advice for some of our investors. What will it be today? What are you going to leave us with?
So the thing is that, because I am a Indian more than I am a fund manager, I just don't like to feel good about the fact, even in hindsight, that, this was happening in the world and I made some extra money. Who cares? To be you have to do things with dignity. And I would say that from our getting rich point of view, buy into the concept that over time equity does well. There is no doubt about that. It may not be the same fund manager doing well, it may not be the same sector doing well, but at the aggregate level, equity markets will beat debt returns of the same market, that is a government bond of the same market, say 10-year bond, by 5-6% per annum, and this is nearly cast in stone. The question that happens is that you might come in at a wrong time, and therefore for the next 3 years you may feel that no, my debt return would have been better. But there is data for 100 years, for tens of countries, that this will work everywhere. Buying into that, as far as I can only add value to a guy in terms of making some money, is to buy into that concept first. That concept is there. I may be looking depressing to you today because I feel bad, but on the market, I am not going to today come and sell stocks, and maybe in the evening you might buy something. Who knows? I haven't been able to see them properly. But broadly, that should be there at the back of the mind. Then day to day, you do what you want.
Really appreciate your time and so glad you could join us. Stay safe, Samir. I know Singapore, touch wood, is much better, but it's important to stay safe and take care of yourself.
Actually, I'm going to come to India next week. I'm coming also, so I am also very much personally.
I look forward to meet you very soon then.
Thank you very much. Bye. Bye.